Investment Advisor Representative, Gerber Kawasaki Wealth and Investment Management. Thanks for being with us. So last Friday, right, we were at lows, in some cases the lowest since February, and today we're seeing the Dow bouncing back. It's the best day in 3 months. I mean, talk about some volatility. What are you focused on?
Well, first of all, Nicole, thank you so much for having me. It's great to see you. What we're focused on is the fact that the economy at large is really reopening, and we see some strong momentum there. We have reopening, pandemic restrictions easing, but from a market perspective, we're very focused on the Fed, what they're doing in terms of whatever Powell says as far as monetary policy goes. And of course, we heard last week that tapering will begin starting in 2022, not 2023 anymore as expected. So this volatility in the shorter term is not anticipated, but we haven't given up on growth yet. We're still long-term focused, as your previous guest was alluding to.
Right, so more long-term. I mean, just to hit on your reopening, you've talked about a name a couple of times that you've been on with us in May and April. MGM was a name, for example. Is that still a name that you favor in light of what's going on? Why MGM?
It's still a name we're favoring, and it's true. They've been a key player throughout COVID because they've been open throughout much of the pandemic in Vegas. What we have to focus on is where the people are going, where the physical economy is working, and that's going to be in the travel space on a domestic level. Where we're seeing MGM as a big player is key in the fact that many people have been flocking there continuously. Still now, if you try to get a reservation at one of their Vegas casinos, you probably won't be able to as easily. But with MGM, the play is still going. We still think that they have strong outcome out of this transitory period.
Right, and you know, also to turn your attention to something else we've been talking about today, and that's Nvidia. This is a name you've liked. The analysts have been on board. Of course, it's getting hit with the concerns about mining, right? As China's starting to curb some mining for crypto, and we're seeing Bitcoin down, Nvidia, MicroStrategy. Is this kind of day where you see a pullback? For example, it's down about 3%. Is this at least in part a buying opportunity? You put a little in there?
Absolutely. NVIDIA is a company we really like as well. The key here is that they have so much diversification as far as what they're involved in. So it's not only the crypto mining that is a big portion, but also their chip production, their AI technology. And that's also another facet of the company that on a pullback we want to buy. They are extremely expensive, so with caution. But absolutely, we are still interested in the company, and we do still think that they have long-term upside.
Yeah. How are you feeling about the consumer? Because, you know, obviously you have the Fed trying to be very accommodative. While there may be some concern about inflation, they're trying to get employment to better, higher levels. What's the big picture here?
So what we're working on right now and what we're seeing as the broader economy looks is that for the short term, you're going to see the consumer picking up that hike in inflation, so that increase in prices when you dine out, when you go on vacation, et cetera. But longer term, inflation is a good thing. We need it. We just don't need it as fast as it's coming. And the Fed will play a pivotal role in decreasing that inflation rate in the shorter term. And so we're looking to see some benefits for the consumer long term. There are also a lot of deflationary pressures that haven't been noted here. So technology, being able to look up prices, that will also push down prices for the consumer longer term. So we think that this is transitory. We don't see it spiraling out of control, and the Fed is here to help that.
Another area that's certainly seen some inflation, that's housing, right? I saw an article, I quoted it earlier, saying that there are homes that are going $1 million over asking. You know, homes are not on the market for very long. We've seen the home builders doing well. They've sort of taken a pause in how they build, the timing of how they get the materials to the site, how quickly, or they sell off a home that they've built so that they can obviously make the most bang for their buck. A name like Lennar is something that you've mentioned to us before, Eva. So tell me more about that.
So with Lennar and with housing in general, what we're seeing is a huge need. So we need 5 million homes in this country and 1 million homes a year. That 5 million number comes from the backlog of homes that have not been built yet to satisfy demand. A company like Lennar builds about 60,000 homes a quarter. We like them a lot because they're positioned really well on the geographic level. They're located in areas like the southeastern portion of this country where a lot of people are moving from big cities to more spacious areas, perhaps. And not to mention, they have a better price point. So it's not your most expensive home that you're going to buy. It's not your 3-4 million, but average about 400,000. That becomes a lot more accessible to the broader public. What we like in housing and what we're seeing as well is that as far as inflation worries, as far as price increase worries go, that's going to be passed on to the consumer. It seems like the consumer is willing to take on that for the foreseeable future. We'll see as far as how well that trend continues, but we are happy that there's a good player to satisfy that demand in the housing sector.